New York applies a wage garnishment formula that uses New York's minimum wage, one of the highest in the country, and a 30 times multiplier, producing a protected earnings floor significantly above the federal formula for New York City and statewide workers. The New York garnishment limit, the lesser of 25% of disposable earnings per pay period, or the amount by which disposable earnings exceed 30 times New York's minimum wage. New York's minimum wage varies by location. New York City and its suburbs have higher minimums than the rest of the state. The high New York minimum wage substantially increases the protected earnings floor, particularly for workers in New York City, where the minimum wage is highest. New York's income execution procedure. New York calls wage garnishment an income execution. The income execution is first served on the judgment debtor, who has 20 days to begin making voluntary payments. If the debtor fails to pay voluntarily, the income execution is then served on the employer, who must begin withholding. Disposable earnings in New York: gross wages minus legally required deductions, federal and New York state income taxes, New York City tax where applicable, Social Security, Medicare. New York's multi-layer income tax system reduces disposable earnings below gross wages. New York City surcharge. Because New York City imposes its own income tax, the disposable earnings calculation for NYC workers includes the city tax deduction, further reducing disposable earnings and potentially the garnishable amount. Exempt income, Social Security, unemployment, workers' compensation, disability benefits, and retirement income are generally exempt from garnishment in New York. New York's information subpoena and restraining notice tools, discussed in our Judgment Collection Guide, complement the income execution process. People Locator Skip Tracing provides New York employer identification for income execution proceedings. Visit peoplelocatorskiptracing.com to place your order.